Oliver Sloup joins us right now from the edge of the trading floor in Chicago. And Oliver happens to be with Blue Line Futures. What do you think of this open here on a Monday on the grain trade? Kind of going all directions here.
Going all direction. Corn, as to be expected, relatively quiet, and it's been relatively quiet over the past 2 weeks, trading in a really tight range. We like being long corn on the longer-term basis, but really need some new news to give us a technical breakout. There's a lot of technical support. 376 3/4 is 379 3/4. This was the December 3rd lows, as well as the 50 and 100-day moving average. If we were to pull back to this pocket, we would like to be aggressive buyers on the resistance side. 386 to 387 3/4. If we can chew through there with some conviction and volume, I wouldn't be surprised to see an extension towards 390 to 393, which is the October and November highs. One thing we've been keeping a very close eye on here over the past couple weeks is money flow. The lack of new news puts a lot more emphasis on money flow, and we've been seeing funds cover their short position and actually establish a pretty good sized net long position here as of late. Friday's commitment of traders report showed that they bought about 50,000 contracts and sitting net long about 90,000. So pretty hefty long position here. I wouldn't be surprised to see them add to it.
So what's your attitude on the soybean action that we have seen over the past week? Do you think it's a disappointment in the export numbers so far?
You know, it's just been a very choppy market, and a lot of it's obviously been pending on the rumblings with regards to trade in China. But ultimately, I think a lot of the bad news has probably been priced into the market. So buy the rumor, sell the fact type of event. I think the market continues to work higher so long as we can maintain price action above technical support. For January, that comes in 892 to 897. And speaking of January, we do have options expiration for January this week. A lot of times going into that option expiration, these large, psychologically significant round numbers tend to be a little bit of a magnet, so keeping a very close eye on that $9 level. But over the intermediate term, we are fairly friendly here, soybeans.
Okay, a quick look at our dollar index as well, and I wanted to point this out to everybody. Of course, we had the Dow under pressure this morning. The dollar is also lower. December futures down 300 points, March down 230 at 96.690. We'll be back talking more with Oliver Sloup.